If you got a credit card, you're holding a balance, and you've been working on paying it off, well, I've got something to tell you, and that's likely going to stir things up. Stop obsessing
Stop obsessing. Stop obsessing. Stop obsessing.
over the balance and stop wasting energy trying to kill it while staying stuck. Because here's what usually happens: you make payments, something comes up, you swipe the card again, and you end up right where you started. Same balance, same stress, and no cash flow. So today, I'm going to give you the steps to turn minimum payments and interest charges into cash flow while still holding a what? Yep, you guessed it, a balance. And all you need is your current paycheck and the willingness to act. I'm Alex, and this is Valor Edge Strategies, where bold decisions lead to victory. We built a private family office from scratch, and we run the strategies for our family. They've been tested, refined, and executed in real life. And now we're sharing them with other families who are ready to take control again. This channel exists to help families move together, build together, and win together through clarity, through systems, through execution. Now, let's get to work. So, here's the part that messes with people with credit cards. The balance only matters, again, the balance only matters if you're paying interest or trying to qualify for new financing. You're probably looking at me like, hold up, what is this buff wizard saying? But answer this honestly. If you're paying zero interest on that balance, why rush to pay it off while your family is struggling? Why starve cash flow when that same money could stabilize your household or create financial opportunity? And yes, eventually you'll want to pay it off. But right now, what your family needs is breathing room. And paying off a balance down forever does not create cash flow. And cash flow fixes problems. Debt payoff without cash flow just feels responsible and it's not effective. So here's what we're going to do instead. We focus on timing and not panic. You need three things: the statement closing date, the new balance, and proper paycheck routing, and that's it. You make payments into the credit card before the statement closes. Those payments satisfy the minimum payment, keep interest at zero, free up cash flow, all while still holding a balance. Again, all while still holding a balance. So let me show you an example on how this is going to work. We've got an NPC. An NPC is non-playable character. It's like playing games. Named Amy. Amy makes $3,000 a month selling pica frescas, and those things are good, so you should probably get some. Her expenses are $3,000. She's not overspending, but she has no cash flow. Amy also has a maxed out credit card. On that credit card, she has a $3,000 balance, 30% interest, $105 monthly payment. Amy doesn't want to be an NPC. She wants to invest. But she doesn't want another job, a side hustle, to sell her first edition Charizard, or to cut everything she enjoys. So Amy watches this Valor Edge video and takes action. Her statement closes on the 30th. Her new balance is $3,000. She gets paid $1,500 on the 1st. She pays that into the card. Balance drops to $1,500. That payment applies to the new balance, satisfies the monthly payment, then she uses the card for expenses. On the 15th, she gets paid again. Another $1,500 goes into the card. Now, her total payments equal the full $3,000 balance. When the statement closes, interest is at zero. That $105 payment, gone. Not delayed, not deferred. It's eliminated. Her income didn't increase. She didn't make $3,105. She removed an expense. Her monthly expenses are now $2,895. That $105 can now be redirected to assets. She didn't change her lifestyle, she upgraded her financial authority. And I know you can do the same. So before we move on, let me simplify this so you can actually execute. 1. Find your financial statement closing date. 2. Find your new balance. 3. Make sure your total payments before that date equal that balance. And then 4. Route each paycheck into the first card. And you got it. That's it. If you can do that, interest drops, minimum payments disappear, and cash flow opens. The impact happens now, not next year, now. Which means you can start the road toward real change for your family. So, why wait? Before I end this video, there is one important reminder. Every credit card is different. Credit card issuers can be, well, sometimes they can be slick with how they charge interest. And some of it is subtle and some of it is sneaky. So, always remember to read your statement. Look specifically at how interest is calculated and how to avoid interest. So, if you're unsure, use tools like ChatGPT to help you interpret the language. And no, we're not sponsored by them, but I mean, that would kind of be cool. If this helped you, drop a comment below, like and share, subscribe to this video so other families can benefit. Subscribe and turn on notifications because the next video builds directly on this. And you don't want to miss it. I'm Alex. This is Valor Edge Strategies, where bold decisions lead to victory. Family first, strategy always be compounding, and I'll see you in the next video. Peace.